Hey guys, welcome back to the channel. Today we're looking at the momentum that is shifting in Bitcoin and cryptocurrencies. Although we're hitting new all-time highs, the price is stagnating and we're also seeing declines in some of the altcoins. So what should you do at times like now? Some would say buy the dip. Some would say just buy at any time, and others would say it's the top coming in. I've seen you and I'm watching you guys in the comment section. Make sure you hit that like button, subscribe to the channel if you haven't already. Each of the days analysis builds upon the previous day. We're studying the macro cycle here, looking at the stock markets, real estate cycle, crypto, and Bitcoin as well. It's your home of macro cycle analysis. Been trading for over 14 years, investing for 18 years. Here is what I've looked at today and sharing it with you guys. So, quick look at the agenda after I've gone through all of my charts and other data points that I want to share with you guys today. As per usual, the traditional markets first, recap of where we currently sit in the macro cycle, or just seeing if there's anything that has changed day to day here. Maybe a quick look at commodities, but more importantly, Bitcoin and the timing at the moment, along with the total cryptocurrency market cap, basically the overall cycle here, the overall picture of the crypto sphere, and a look at that timing in particular and what you don't want to do at these times. And I guess more importantly, what you should be doing without giving you financial advice, of course. And a big question, a very common question that comes up: where do you put your gains when the collapse occurs? You've probably seen the 18.6 year cycle. I think there will be a pretty significant correction that appears later this decade. So what do you do in those times? And if you are new joining the channel, fantastic. Thank you for being here. We really appreciate it. And I guess I can just recap that with you towards the end of the video. So first up, just a quick public service announcement. Basically, get onto the email list, because you never know when my channel could get taken down, or any other socials out there. I've been suspended off Instagram. Probably, I know I can hear you guys now. Who cares about Meta or Facebook or Instagram? Sure, but basically that happened without warning. I was just doing a Q&A on Instagram, and yeah, it's over there for now. Hopefully not forever, but that's a really important reason why. I mean, look, I'm saying subscribe and get on the email list. You just never know with these platforms. So ideally, the email list is the absolute best way to stay in touch. All right, guys, let's move over to the stock markets. Just looking at November in the short term, then we'll push it out to the long term. We've seen a couple of days down and now a slight reversal for the S&P 500. Looking at the day of the month here, given to us by Ryan here at Carson Investment Research, you can see for a cyclical pattern of the last 73 years, there happens to be a small decline in November and then a move to the end of the month. Now, we have looked at other cycles where the end of the month can show a peak somewhere later this week or early next week, and then a decline into the early part of December. And if we start this as December, we can still see further downside, and then you start to see a rally leading into that sort of Christmas period. So if you just look at the day counts here, that leads you into the end of the month of December, and then obviously through to January and February. But for now, seems like we're in this particular period for the S&P 500, which is, I think, a good thing when it comes to the markets, as it starts to reset that market sentiment, especially getting away from the greed and the extreme greed. Neutral is a great spot for the market to keep climbing. The last time we had fear was at the Japanese yen carry trade low, the freak out point where people were, again, or analysts, all these professionals from Bloomberg and CNN and you name it, were telling us there was another recession on the cards. That's 3 months ago, and they've been saying it for years. It doesn't seem like it is happening at this stage of the cycle. Remember, this says major recession, peak, and then collapse coming later. I don't think it's in 2025. We're looking for a rounding of the real estate and the economic cycle, but for the stock market, maybe you're looking out towards 2026, maybe 2027, but we'll cross that bridge when we come to it. Okay, so that's what we've seen now with the fear and greed. Nice reset. That takes us over to the chart of the S&P 500, which is in an interesting position because maybe some of you have seen it. Red, see that red right there? And the next red and the next red. This is the Gann Swing Pro. Link, as always, would be in the video description. Check that out there. And this is showing up with our 3-day signal. I'm using it from a top. Last time we used it was from another very significant top back in July, and then that spelled over into August with that collapse. But you can see here from the peak, you had red, 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 a little rally, weak rally, and then a further decline and another very significant decline. So that brought up a 10.5% correction for the S&P 500. Now, this is all building towards slowing of momentum, which we have seen and we are experiencing right now for Bitcoin and the crypto market caps, which is okay. It's not the end of the world, but it's just to bear in mind as to where this might be coming from in terms of our timing. So we've already done, or the S&P's already done 3.3% down. Last it did was 3.4%. So a pretty equal correction here so far. And so far it's bounced off the 50% level. Could be a weak rally because we have this particular signal in mind. And last time, well, we did 10.5% and it took 2 months to recover and get back to a new all-time high for the S&P. And then you start to see further gains for BTC and altcoins as well. So it started to get the momentum back after we had a nice flush out. Are we going to get another 10% flush out? That's anyone's guess. I'm not saying that we must get a 10%. I'm still looking towards any of these lower targets here at 5 or 6%, and then the 50% level to show any sort of signs of support for this market. And who knows, maybe it doesn't even get there at all, and this is just another correction from this point. I think at the very least, you can replay this later, that we'll get some sort of at least small correction, if not a little further, because of this particular signal towards the peak. So that's the S&P 500. The NASDAQ in a similar position here, however, slightly different signal at the top. But if the S&P is going to be weak, you'd expect the NASDAQ to be weak, and also the Dow Jones to be weak. Short term, guys. All right, that's what we just tried to capture here at the beginning. A little bit of weakness, maybe a rally, and then more weakness into the beginning of December. That also, massive one here for you guys, is showing on the DXY, on the US dollar. Rejected at 107, down, down, down. This day is incomplete. It's just started, the Wednesday bar here. So this could spell into a weak rally and then maybe another retest lower. This has been a very strong move up out of another TIA exclusive. We're the only ones giving you this signal because we're the only ones that have backtested it. When I say we, I mean Michael. And I've backtested it now that Michael's shown it. But we've got the 3-day rule from that very specific low. And it showed huge movement to the upside. The rule works fantastically. It's not 100%. No rules out there are 100%. So when you see this signal come up, especially on the US dollar, don't ignore it because it typically spells a change in trend, a pretty significant change in trend, as you've seen at each of the, well, let's call them significant lows here over the last 2 years. And at that very recent top in 2022, or the big top here, 1, 2, 3 red days in a row, weak rally, and then that's has now kept the market down from that high for over 2 years. So we're watching this like a hawk at the moment. On the flip side, there has been a lot of pretty decent strength to the upside. So this might just be time for it to pause and have the longest correction in this entire move up. So far, this is the longest correction. This might be another chance for that. Okay, so covered this, and the commodities, just looking at DXY. Let's get on with BTC right now. So the first things first is the exchange volume, still at elevated levels, so good to see, even though that some of this excitement has worn off, still at trading around $116 billion, so above the tops. Even if we do get a slight correction here, we have moved so far away from that level. Seems like we could be putting in a higher low, which is a good thing for the markets. Also with the liquidity, again, more flush outs happening, less on the short side, more on the long side. And overall, it is dropping off because the price ranges of Bitcoin are also dropping off. You can see the 24-hour rect is around $300 million wreckage for liquidations. In terms of the search volume, it's also just plateauing. So we're not seeing any crazy declines, but it's basically just plateauing here, which is fine. That happens after you get quite big excitement and then the market wears off. In terms of meme coins, are we also seeing a drop off here? No, we're seeing an increase. So in the last 24 hours, we've seen the highest search volume that we have seen in the last 30 days for meme coins. In terms of 12 months, I dare say it's going to be, the highest we've seen in 12 months. And of course, 5 years, you'd have to expect this will be the all-time high. So meme coins aren't going anywhere at the moment. People are still searching for these left and right. So if you're looking for altcoin narratives, I don't think you can go past meme coins. If you want to have a look at an AI coin, whether that's what people search, you can see it dropping off slightly compared to where it was about 8-9 days ago, and meme coins are taking over. So it's picking up a little bit here, but not where it was about a week ago. Something to keep in mind, but both seem to be pretty strong narratives. As for the Bitcoin ETF flows, no signals here, and this signal has definitely worked yet again. The contrarian signal to the Bitcoin ETF flows. If I can offer some suggestions here, if you're finding people or analysts or whatever, that are focusing on ETF flows, Bitcoin ETF flows, as a sign that the markets are looking strong and they must keep going up, I personally wipe them off. I don't listen to that type of data because it gets you on the wrong side of the trade. And that is fact now for 11 months, 10, 11 months, right? Every time you get these extreme days, it's either the end, like the peak, or very, very close to the peak. The times you want to be in are when no one's talking about it. And that's what I try to identify, and I think we've done relatively well here on the channel. Give us a like if you think that's the case down below, and we'll see whether that is the consensus. So over to the fear and greed. We're at 83. Market is still very, very hot. So you got extreme greed still occurring. We got a new all-time high price for Bitcoin, yet the greed has dropped off slightly. Maybe we're getting a slight divergence here. People sort of cooling off to the fact that we keep pushing up higher. However, I don't think it's really going to go anywhere for some time. If we look at the year's data here, it jumped up on the 15th of October into pretty strong greed, and that's now been just over a month. So maybe we have another few weeks left here. USDT dominance. So the big one that we've been watching here to see whether this breaks down and sends us to the moon, to wherever, is still holding out at 4.26%. So I think once we get that breakdown below this level, 4.2, 4.1, and then takes out 3.8, that's going to be the trigger to more money coming in. So it could just be a little bit of a short-term thing here that the markets want to hold up. And once we get to the timing of this, of this move up, you can really start to see why now things have ground upwards to a halt. The last time we've really got any sort of big moves was on the 11th of November. And you can see from that point, which was now 9 days ago, it's basically been slight moves higher and lower. It's basically been a slow grind to the upside. Do we get a little bit of a flush out and a push higher? Do we get a pop out? That's anyone's guess. I'm not wanting to play that game, as I'll show you why in just a second. Really, at this point, you're either in or you're looking for that signal to add to your position. I think being out at this point isn't the greatest idea, especially as I think we're going to see more and more FOMO come in, which will likely make people make worse and worse decisions. The more the FOMO comes in, the worse decisions people make, and they cling to any narrative. Now, I tried to give this, which we did on the live stream to our members this morning, TIA Premium. Guys, if you want to join, there is a Black Friday sale coming up next week. You guys know it's Black Friday. Link in the top of the video description. Subscribe there and you will get that sale. It's the biggest sale of the year and our biggest one ever. We are combining TIA Premium with the TIA Indicator Suite. Huge, huge savings over there. So in terms of Bitcoin and where we sit, well, 9 days grind. I've got 14 here because the last times we saw this, you can see we've got pauses here of 14 days before you start to see a pop up to the next trading range. What do I mean by that? Well, you can see here is 35,300 pops up to 38, and then you get this trading range between sort of 36 and 38. The overall time frame here before you get the next big pop out was about 38 to 39 days. So keep in mind, it could be 2 weeks, could be somewhere out to 5 weeks, maybe a little more on the shorter side until we got some sort of smaller pop out. But within those pops, then you get the corrections as well. And overall, I'm just looking at this as being a bit of a, well, so far the market's showing that it's just being a bit of a grind to the upside and basically waiting to see who wants to make that next move. Do we get the pop out or the pop down? Unless this market can break 85, it doesn't seem like that significant correction back down to the 70s is going to occur. We've had very strong volume, very strong moves out of very significant dates. One in particular was at 6th of November, huge breakout bar that broke an 8-month accumulation, reaccumulation between that 50 and 70K. Took out the top on the 6th of November. Now, I bring that up because that was a date, a seasonal date, again, seasonal date that we were looking at the time, because previous years have also shown that to be a key area. Now, these dates are really important to remember because certain things happen at these times. Like we saw this year, like we saw last year, you can see pretty big energy pushing the market out to a high, which then paused the market so that you can be prepared for what could, what could happen next. Everyone's sort of buying in on these peaks and then nothing happens for 3 weeks, right? The year before that, the same dates had very significant energy pushing the market right down to the final lows. The year prior to that was the all-time high, the 8th and the 10th. The year prior to that, you had the 6th big push out on the 6th again, so 4 years ago. And then the market paused for 11 days in this higher grind. So you can see how it's same, but different, slightly different in terms of the exact percentage moves, but basically very, very similar when it comes to the dates and when these things happen. And also with the same, but different, depends on the stage of the cycle. Like in the bear market, it was going down, but on those dates, it crashed again. So looking back to 2020, you had a pause of 11 days and then it basically took off again. Sometimes it doesn't happen. We're not looking for 100% accuracy, but just more often than not, it's an important point to look out for. Just like you might want to have a price target in mind. Doesn't mean it has to get there, but we've got price projections in mind. Taking it back to 2018, same sort of thing there in mid-November. We can go back and back and back, but for now, I think that sort of serves the point as to why now is a change in momentum, and we've seen that now. It's actually happened now for the last 8 days. We're into that 9th day now where basically prices haven't done what they did on the 11th, on the 10th, and also on the 6th, that big excitement. And it's coming across in all of the other search data that we're also looking at. Now, how long might this particular move last? Well, from the low to where we currently are is about 15 weeks. From the low last time in 2023, 15 weeks out, took you right around this midpoint before you had that final peak, a dump, and then you had the move out again. So somewhere around here, maybe you've got more of a pause before we get into that final move to the upside. Now, it's possibly final within this wave before a correction, and then wave 5 of 5, the big one that we are still waiting for. This has been very, very big on its own, but I think there's even more to go. So, you've got corrections within very significant moves. That's what I'm expecting coming up over, say, end of this quarter or quarter one. We have some sort of pause, and that would lead to the base forming for that next move up. Timing's working out, the lows are working out, the breakouts are also working out in a very similar point. Again, same, but different. BTC timeframes, 30 weeks low to high, and then the stop. Again, low to high, and then the pause, stopping area. We're currently about halfway through one of those. So basically, you can see here, 30 weeks was the move, then we stopped, then from the low to the top, about 30 weeks, and then it stopped again, and now we're about 15 weeks into this move. So where does another 15 weeks, which would be a total of about 30 weeks, takes us out to, well, quarter one of 2025. Remember, give or take, we're looking at longer term timeframes here. So keep that in mind as we move forward, and it's not a straight up line. Slower move here, then another correction, and then basically towards the peak. You got a slower move here, another correction, and then basically the final peak correction, another peak, correction, basically didn't get any further than that. So there's a lot of similarities playing out here. The good news is you got big volume coming in as the market breaks out to the highs. That's what you want to see in a strong trending market. If you avoid these times, if you sort of get bored when the market is slowing down, which it does a lot of the time, where are my numbers? It does it for about 85 to 90% of the time. It does nothing, or what feels like nothing. It could be climbing slowly, but the majority of the time it just sits there and climbs slowly, and then you get those big moves. If you sort of leave the market at that time, you basically can leave a lot of profits on the table. Like if you get bored and you're just waiting for that move to happen, you can see over the last 2 years, now we have 2 years of data here, 104 weeks. 2 years of data, you've got 4 weeks out of the 48 weeks price moved. And the way I've identified this is just looking at bars where the price doesn't overlap. It's a little subjective, but you can make from it what you will. Just up to these levels, and then you can see the price move again, and then I've just drawn a line across, and you can see the price move again. So as long as you capture those 4 weeks out of the 48, you'd be taking home 95% of the gain. The problem with 95%, 98%, whatever you want, of traders is they either get bored, they sell because the market's gone down a little bit here or here, and then they decide to come back when it goes up. It goes up, they don't sell, it comes back, and so they sell, and the same thing happens time and time again. That's how you can find a lot of people not making any money in the market, even though the market is just going up. The secret is that it's essentially should be a boring game and not this all excitement about 1000x, 20,000x sort of returns. It should just be a boring game. And so provided you're in the market, this sort of these periods where it's going up, in the case of this 48 weeks, it was 8.3% of the time you would take 95%. And then the next movement I measured from here and to where we currently are, because we're looking at some sort of pause happening right now in the market. That 56-week period, 8 of the weeks had 94% of the price action to the upside. The rest of the time, it went down or did nothing. So provided you're in the market 8 weeks out of 56 weeks, and if you know how to pick those exact 8 weeks, please let me know. Otherwise, it's probably just a good idea to sit in it until you find there is a signal to get out. But for now, basically, the majority of that time was spent either going sideways or down. And so you don't want to miss out on the periods that it's actually going up, because that's where the profits are made. And speaking of profits being made, we have the quarterly returns here from the TIA indicator suite. We're looking at the forward returns dashboard. October to December, we're currently up 46% for this quarter so far. We're just past halfway. For this quarter alone, total data points, we have 15. So basically 15 years, 10 wins, 5 losses, giving us 2 out of 3 times you're expecting a win. If we take out the bearish years, so 2014, 2018, 2022, and I'm doing that because I don't believe 2024 is going to be a bear year, ending lower. Maybe you have a different opinion, but I don't think that's going to be the case. Then we change the points here to around 83%. So quarter 4 is typically the best quarter, barring the bear years, 2014, 18, and 22. So another, to me at least, a good reason to just stay put in the market, continue to hold out, and then we find ourselves moving through to the next year, which would be similar, or ideally, we don't know for sure, but ideally similar to, say, 2021. 4 years prior to that was 2017, and 4 years prior to that was 2013. So how did those years do? 2013, all green. 2017, all green quarters. And 2021, we had one red quarter, one significantly red quarter. And then also that final quarter showed a very, very small gain. So that was when the market started to roll over, peaking in November and then starting to come crashing down in December. So 2021 was the year to be concerned with for this particular data. Maybe going into 2025, it's going to be a little bit trickier like 2021 and not so easy like 17 or 13. But of course, we'll continue to cover that here on the channel. Looking at those results, however, quarter one, 73% win rate, so not too bad. So no video is complete without looking at cryptos as well. Ethereum still struggling here on the daily, basically haven't done anything. ETH versus BTC is getting to that time frame, if not already in that time frame now, towards the end of November, where it's been, well, in similar years, the historically shows that this would be the time that you would expect ETH to start to go on that rampant run. I don't know what the narrative could be apart from meme coins on ETH. If you've got another idea about some sort of narrative that's building on ETH, please do let us know in the comments. But apart from that, in terms of the chart, it's a bit of a same but different. You can see this brief move out, then a correction down. It also put in a new fresh low yesterday against BTC, and similar thing last 4 years ago. You had this move out, a correction down, took another few days, and then it started to go. So it might sound like I'm totally bearish on ETH. However, I'm just looking at the last 4-year cycle, and it seems like now would be around about that time. Now, or give or take a couple of weeks, now a couple of weeks forward, you'd have to expect, if it is going to be similar like last time, that it's got to get a move on November or December. So not much time left for ETH if it is going to be similar to the last times. For those of you that have stuck around to the end, here is Solana, and we're looking at the price targets to the upside. I didn't mention this earlier on that I'll give another price target here, or at least look at the updates of the price targets. So far, it is going relatively well. 210 bucks surpassed, and now sort of finding a little bit of resistance as we get closer to that all-time high. Now the 100% level is at $312. The next level is around $400 and call it $12, $13. I like this level because it has two price targets in mind. You've got the extension here, so that one to there off the low, which is this short line coming out at 150%, so an extension of the first move. We've seen that happen now with Bitcoin, and we see it all the time on strong altcoins where they are extending their total gains from that first leg. That essentially looks like, well, if Solana did $200 in that first leg, $202, it's going to do more in terms of dollars in this next move. So going from around 109 to 413, that would give you a total of around a $300 move to that top. In terms of percentages, different percentages, but in terms of dollar moves, looks like it could have that left, at least, let's say at least, that left in the tank. And as I said, it's got two price clusters up here, one being the extension and two being the entire range projected off the top by 50%. So I like when I see these clusters coming in. That's my next significant, bigger target. It's obviously still got to get through the $300 psychological level, 312 as well. But yeah, I've got my eyes set on somewhere around $412 for Solana. As for SUI, starting to get a little bit of a pause here. As I said in the title, something around the momentum. You can just see the momentum has started to cool off. The volume's dropped off here. The price ranges have also dropped off. It doesn't mean I think the game is over. It's just we had so much excitement over the first and second week of November that it's only natural for the market to pause here. And a pause at higher levels could lead to, you know, a bear flag, which then leads to a breakout to the next price target. So I think look, who would disagree that $4 is baked into the cake here for SUI at this stage of the cycle? I don't know. But in terms of the next price targets to the upside, $4.85, and then, which is basically your $5 level, and then we'll look towards $6 and $6.50 for the next significant levels. I'll update this with some more price targets that coincide. You get a bit of a price cluster for SUI in future videos. But I think for now, that's gone on way long enough. Like, subscribe, links in the video description, guys, for Black Friday. And like I said, make sure you're following on X. Can't follow on Instagram because I'm not there. And also on the email list should anything happen throughout this cycle. Now, I'll come back to this comment in future videos about what to do with your profits at the end of the cycle. I think we still have plenty of time to go. Sorry I didn't get to it in this video, but I guess it's just another time that we can spend together in the future. Take care and peace out, guys.